you are. I hope it will be sorted out very, very soon. But three things that I would want to talk about, Tafadzo. The first thing is that the global economy seems to be in a good space at the moment. I've been going through quite a number of business articles in this past week. And one theme which is coming out of those business articles, especially as far as investments is concerned, is that global stocks are on the brink of an all-time high. So I've been watching quite a number of market indicators, and it's all positive, Tafadzo, which highlights the importance of us staying invested at all times. Remember, 2 weeks ago, Tafadzo, we were talking about how stock markets had plummeted in Japan. Now the story is quite opposite. Whether you're looking at the JSE, at the American Stock Exchange, it looks like global stocks are actually going up. And I hope to everyone who is listening to us, you're actually invested on the stock market because that's the only way that you can profit from this. So on Thursday, Tafazo, I just had a look at some of the indicators. The S&P in America had risen by 0.2%. The Nasdaq in America had risen by 0.2 as well. In Europe, the stocks Europe 600 rose by 0.5%. And then the MSCI World Index, rose by 0.1%. And the picture is also the same with regard to currencies. So the rand has been strengthening in the past week. If I look at the British pound, it also rose by 0.2%. The Japanese yen fell, but most of the currencies have been rising. Cryptocurrencies have also been rising, Tafazo. So in this particular week, Bitcoin rose by 0.2%. And one of the cryptocurrencies that I invest in, Ether, also rose by 0.4%. If I look at bond yields, bonds is basically a debt instrument. These are instruments that have been issued by governments. In finance, government is the safest borrower there is on the financial markets. So in America, the yield on 10-year treasuries, also increased to 3.82%. And that has been the same in Germany, in Britain as well. And the picture is the same with commodities. Our audience may actually be interested in finding out what is it that is responsible for the positive sentiment, particularly as far as global stocks is concerned. I think the one thing that we can see is the growing expectations for interest rate cuts. And I'll talk about that in my other update. So the whole world, particularly the financial markets, are actually expecting that interest rates will be cut from September going forward. And that positive sentiment is actually resulting in stock markets particularly going to record highs. So the first update is that global stocks are on the brink of an all-time high. The second thing that I would want to mention is just the inflation picture. So inflation is the rate at which prices are going up. I know people get confused with financial terminology, and we try to keep things very, very simple on our platform. If you don't know what inflation is, and I will explain what it is later on, it's basically the rate at which prices are going up. But the relevance of inflation to your wealth accumulation journey is that it's one of your enemies. Just know that in your wealth accumulation journey, you will have three enemies, and inflation is your biggest enemies. To win in this game of wealth accumulation, you have to know who your enemies are. You have to know who it is that you are racing against. So that's why we give an update on inflation. And that's why we also encourage everyone who follows us to always be monitoring what inflation is, because that's one of your enemies as far as wealth accumulation is concerned. So let's talk about inflation, Tafadzwa. In this past week, I think it was 2 days ago, we got news that South Africa's inflation rate had dropped to the lowest level in 3 years. So in South Africa, inflation is on a downward trend. So there is an inflation indicator that is referred to as the headline consumer inflation. And that headline consumer inflation dropped to 4.6% in July. So when they compare prices in July and how prices were in July last year, prices have dropped by 4.6%. And the previous rate was, the previous rate in June was 5.1. So inflation is actually going down. What it means is that if inflation is going down, there is every likelihood that in the next meeting of the Reserve Bank, they are going to reduce rates. So most of the economists that you talk to in South Africa are actually predicting a rate cut in September, because that's the next time that the Reserve Bank Committee will be meeting. And that's a very realistic expectation. And the reason why it's a realistic expectation is that in the way that the Reserve Bank here in South Africa tries to manage the economy, they target inflation between 3 to 6%. So as long as inflation is between 3 to 6%, they are very, very comfortable. And so at a rate of 4.6%, inflation is actually trending towards the midpoint of that range, which is 4.5. So my own view, and also given the pressures that the Reserve Bank is under, particularly to stimulate economic growth, my view is that we are going to see an interest rate cut in September. I think the stronger rand, is also bolstering the view that that interest rates will be cut in September. There. Still talking about inflation, let's now go to America. In this particular week, the chair of the Federal Reserve in America, which is the equivalent of the Reserve Bank in South Africa, Chair Jerome Powell, he gave a speech, and in his speech, he actually indicated that the time has come for the Fed, which is the Federal Reserve, to cut interest rates. So he was actually quite emphatic that the time has come for policy to adjust. If you are following how the Fed do their things, you would know that in the last interest rate cycle, they were a little bit slow to increase interest rates. And my own sense is that this time around, they would want to do it at the right time. So in America, the expectation is that interest rates will also come down. If I look at some of the indicators in America, I think people there have not been quite impressed with the jobs data. So there might be a need there for interest rates to come down so as to stimulate the economy a little bit further. So that's on the inflation front. The third thing that I would want to say, we spoke about this, Tafadzwa, how the retirement regime in South Africa is being restructured from the 1st of September going forward by the introduction of this two-pot retirement system. So to put it very, very simply, the retirement of the pension fund system in South Africa is being restructured to such an extent that they would want to allow everyone saving for retirement to be able to access part of the retirement funds immediately. And the other part, 2/3 to be accessed on retirement. So this is the first time that they're implementing this reform in South Africa. with effect from the 1st of September. We've spoken about that. And if you follow us, you know what our advice is. But I was a little bit concerned, Tafadzwa, when I was reading the results of SPARE. SPARE is a restaurant and food group in South Africa. So they published their results in this past week. And their results are showing that they are doing reasonably well. I think their revenue has increased by 14%. But one of the things that the leaders at SPARE said is that with the looming retirement reform, they are actually seeing SPAREs increasing their revenue. In other words, they're basically expecting that once people are allowed to access their pension fund, they are going to spend quite a lot of money on food because SPARE Corporation owns food outlets such as Rocco Mamas, Doppio Zero, Panarotis, and so forth and so forth. So they are actually expecting that as people are allowed to access part of their pension funds, that will boost their revenue. I hope you are not one of those people that fall into this category. Having given you all these updates, let me just give you an advisory. So last week we did indicate that there is a possibility for fuel prices to come down. Today we're saying there is a huge possibility in September for interest rates to come down. We are also saying that from the 1st of September, if you are working, you've been saving for retirement, you will be allowed to access part of your savings. Here is the advisory. Use those additional funds to pay off debt. I would want to repeat myself here. Don't use those funds to spend on food, which SPARE is hoping people would do. Don't use those funds to spend on consumable items. Use those funds to pay off debt. If you've got debt and you find yourself with excess funds, our advisory is use that money to pay off debt. I have absolutely no problem with anybody who uses, for example, their savings portion of the two-pot retirement system to pay off car loans. Start with car loans, for example. So my priorities would be pay off your car first. I'm assuming that you don't have unsecured loans. If you've got unsecured loans that have got a high interest rate, start with those. Then go to your car loans. Then use a certain portion of that to the extent to which you've got investing skills to begin to invest. And then obviously, if you still have a portion, you may want to pay off your bond very, very quickly. So that's our advisory. And that's the update that I have, Tafadzo.
Thank you very much, Themba, for that update and the advice that we should invest, and if we have any excess funds, pay off our debts. Last week we introduced the book Just Keep Buying, Proven Ways to Save Money and Build Your Wealth by Nick Makiguli. Forgive my pronunciation. I went to a public school and I don't think these words were such names. We never came across them. A top finance blogger who is the author of dollarsandData.com, a blog focused on intersection of data and personal finance. Mr. Maguli is also the Chief Operating Officer and Data Scientist at Rithos Wealth Management. What are some of the additional lessons that you have learned from the book from last week, Themba?
So, Tafadzo, going to a public school is no excuse for mispronouncing people's names. Let's just be clear on that. Imagine if somebody mispronounces your name and then they give the excuse that they went to some school. I'm just joking there, Tafadzo. I understand exactly what you say. Um, we encourage everyone who follows us to read books. Reading books is a way of being smart. Reading books is a way of accessing hidden knowledge. So every time we do these kinds of presentation, we've got a book that we are promoting. So this book, we started promoting it last week. We don't get paid for promoting these books. I think there is quite a lot of hidden nuggets in this book. I'm not going to repeat what I said last week, but there are two thoughts that I would want to say, two additional things, and then next week we'll introduce another book. So the first thought that I would want to just bring to everyone's attention is a quote from the book. So Nick says, yes, selling your time, your skills, your products is great, but it shouldn't be the end goal of your wealth building journey. The end goal should be ownership, using your additional income to acquire more income producing assets. So, what is Nick talking about? We will be talking today about growing your income, and I will outline quite a number of principles around growing your income. I will also give you ideas on how you can grow your income. What Nick is basically saying is that the end goal is not just growing your income. The end goal is being an owner. So don't just have this goal of saving money. Have an ownership mentality. So if I still remember very well, I think I will get to the part of the book. I still have a copy of the book with me. In the book, Nick talks about an NFL player. Football is very huge in America. So when we talk about the NFL, we're talking about the football league in America. So he's talking about a guy who is called Jerry Richardson, who used to play in the NFL. So he used to play football in that league. Nobody knows who Jerry Richardson is. I think the players that are well known people like Tom Brady. I think Tom Brady, everyone knows Tom Brady. He's made quite some money playing in the NFL. But the point that Nick is basically trying to say is that people like Tom Brady are more talented than this player, Jeff Richardson. He was an average player in the NFL. But what Jerry Richardson did very well, by the way, Jerry Richardson is one of the billionaires in America at the moment. He started off as an NFL player. What he did very well is that he used some of the money that he got from playing in the NFL to invest in a fast foods outlet. And he made a lot of money from that. And then later on, he has actually bought an NFL franchise himself. And of all the players that have played in the NFL, he's the only one who became a billionaire. And the reason why he became a billionaire is because he had an ownership mentality in mind. So, what is the point that we're trying to say? Grow your income. As you grow your income, the end goal should be ownership. You should be wanting to buy income producing assets. That's why we always advise people to say, look, saving should not be the last thing that you do with your hard earned cash. Saving should be the first thing that you do with your hard earned cash. And we've advised everyone that as you are starting on your savings journey, start by saving 10% of your income and then increase that over time. Where is that money going to go to? It's going to go to buying assets, income producing assets. And those income producing assets could be stocks, could be shares, it could be anything that goes up in value. Clothes are not income producing assets. Cars are not income producing assets, except to the extent to which you start a transport business. So don't use your hard-earned cash so much in items that lose value. Use your hard-earned cash to acquire income-producing assets. That should be the end game. And that's where wealth is being created. So let me repeat my point, because this is a very delicate point. I have no respect for somebody who starts working and then they retire. And then by the time they retire, all they have is acquisitions. And those acquisitions are not income producing at all. Zero respect for such a person. I've got respect for somebody who, from the first day that they start working, they set aside an amount to acquire income producing assets as part of their budgeting process. And when we talk about income producing assets, we're talking about property, we're talking about shares, we're talking about investing in projects, starting a business, starting a side hustle. I've got respect for such people, because by the time you then retire, at least you own something, and there is every possibility. It does not matter whether you're a soccer player, you play instruments, you've got a particular skill that you have. Whatever income that you are earning is active income. Active income is the income that you sweat while earning that particular income. So, like this guy that we've spoken about was an NFL player. His name is Jerry Richardson. Playing very hard, not very talented. But what he did was to save his money, started a chain of fast foods outlet, ended up buying a franchise for himself. So here is the tip that I would want for everyone to just bear in mind. You're working for a particular company as an employee. Always have this thought in your mind: how can I be a part owner of this business? Right? There are always ways of doing that. How can I be a part owner? Because in my mind, there is no benefit in terms of working very hard within a particular company and then you don't benefit through ownership, because ownership is where we are aiming at. Another thought that I would want to bring to everyone's attention, which is also a lesson from the book, is towards the end of his book, Nick says, time is and will always be your most important asset. So we all have assets that we have. And Nick is saying money is not your most important asset. Time is more valuable than money. In other words, before we teach people about managing money, you must learn about managing time. I've come across people who mismanage time, but they would want to manage money very well. It does not happen. In fact, remember what I said, when we teach people on this wealth accumulation journey, we teach you to change your mindset. Then we teach you to manage your time as well, because time is a much more valuable commodity than money itself. And that becomes very, very important. Then at some point, we teach you how to leverage your time so as to create more money. You cannot leverage your time to create money until you've learned how to manage time itself, so that you can earn what we call leveraged income. So as far as income is concerned, let's just split income into three buckets. And those three buckets basically talk about the quality of your income. So in the first bucket, let's talk about active income. Active income is the income that you earn that you have to sweat for. In other words, you report for a job. If you don't go to the job, they won't pay you your salary. That's active income. Then we've got passive income. Passive income is income that you earn from income producing assets that you have created. That's the second bucket. Then we've got leveraged income. Your leveraged income is income that you earn from leveraging your time. So think of schemes such as network marketing, where you actually recruit people to a network and then you benefit from their efforts. Even if you may not be working hard, but you're able to leverage your time. That's leveraged income. So in growing our income, we're not just talking about growing. I don't want you to have this idea of growing active income. It's good to grow active income, but it's much more preferable also to grow your passive income and to grow your leveraged income as well, because that speaks to the quality of your income. But let's just be aware of this thing, that time is your most important asset that you have. And there are three thoughts or three insights that proceed from that very thought. The first thought is, the earlier you start on the journey of wealth accumulation, the better. I know that in this wealth accumulation journey, people will tell you stories of Colonel Sanders, who started building his KFC franchise, I think, at the age of 65. Those people tend to be outliers, because by the time you're 65, you are very, very tired. So one insight that flows from this statement is that the earlier you start, the better. The earlier you start, the better. I always encourage young people who've got some form of income to start on the journey of wealth accumulation, because time is on your side. Time is on your side. As you go beyond 50, you're becoming tired, and sometimes time is not on your side. So the earlier you start, the better. The longer you keep your money in the markets, the more that money will work for you. Very, very important. That's another insight that flows from this particular from this particular um, 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 from this particular thought. What do I mean by that? What I mean by that, have you ever come across somebody who invests in a particular stock, and then that stock is doing very well for some time, and then they get excited? They then take the money from the investments, and then they use it for something else. The thing about investing is that even when you get dividends, you must reinvest the money and be consistently invested in the market over time, so that the time value of money principle, which is compound interest, can work to your advantage. Very, very important for us to understand, that. So the thing about winning the money game is for you to have compound interest working to your advantage. And that comes with a lot of consistency. It comes with reinvesting your money. It comes with delaying your gratification for some time. That's why, we've spoken about the two-pot retirement system. And I said that the only time I will allow you to withdraw that money is when you're using that money to pay off your debt, you're using that money to invest in a project. Otherwise, keep your money invested in the markets for a long time, so that time may work to your advantage. Right. The third aspect, or the third insight that flows from this statement, which is very, very important, is that, and I have applied this, maybe we'll take time to teach about time at some point. Just understand the value of your time based on the income that you are earning. If you understand the value of your time, don't be tempted to do items that are of low value. Very, very important. Focus on what you are good at. So let me give you an example. We're talking about time being your most important asset. Let's just say I earn an income of 1,000 per hour, based on all the things that I do. And then in my home, there is a task for which I can pay somebody 100 rands an hour. I should not be tempted to do that low value task, whether it's meaningful, whether I can do it. I would want to focus on what I do best, so that I can maximize my time and leverage the time over time. That's very, very important. There is a fourth thought that is coming to my mind that is flowing out of this thought. All right. The thought, and there are so many thoughts that it can come to you as well, arising from this, because many people don't understand that time is limited, and that time is much more important than the money that you have. The other thought, there are two thoughts that are flowing to my mind, but the one thought that is flowing to my mind is that if you want to build a sustainable business, maybe you're a business owner, have a generational mix in your business. Now, that's very, very important because young people have got time and energy on their side. You don't have time and energy, and over time, we will age. Sometimes I see people that operate on the assumption that they will always be able to do the tasks that they've been able to do in the past, not realizing that they are aging in the process, and that to be able to do what they need to do in business, they would need to bring in young people from whose energy they can leverage their time. Now, that's very, very important. So far, I have said to you that there are insights that I would want you to get along this presentation. One of the insights that I would want you to get is that growing your income is a function of using tools of leverage. And realizing that time is limited, you need to leverage your time and use other tools of leverage that we'll talk about. For example, debt is a tool of leverage. So debt can be used productively in our attempt to grow our income. It's a tool of leverage. So as you grow your income, let your income not grow linearly. It has to grow exponentially. But for it to grow exponentially, you have to use certain tools of leverage. And so probably Tafadzo, just as a thought of what we can present next week, let's present on tools of leverage. Tools of leverage, how you can employ certain tools to actually boost your income so that your income is not growing incrementally, but it's actually growing at exponential rates. Because look, what is the point of being rich when you are 70 years or 90 years and you're not able to enjoy all that wealth? I would want us to, and this is my formula in life, I would want us to make money very quickly at exponential wealth creating rates, and then use the rest of the time that God has given us on earth to actually do the purpose of God that He has created us to do, other than being stuck in a poverty trap. Before I hand over to Tafadzo, let's just be clear on this thing. Let's be clear on this thing, and I hope you will get it. There are two groups of people in this wealth creation journey. Two groups of people. There are people that are stuck in a rat race and in a poverty trap. Those people tend to be the majority. And then there are people who have escaped from the poverty trap and from the rat race. Right. So one of the reasons why you need to grow your income at wealth producing exponential rates is that you may escape that poverty trap. Right. We call it a rat race for a reason. Right. Today, I would want you to picture this thing. You are in a race with three things. Right. Three things that I will highlight later on. Inflation is one of them. You have to win that race before you can escape the poverty trap, before you can escape the rat race. And I will talk about, so which means that you need to grow at exponential rates for you to do that. If you are not consistent and using time to your advantage, you will never win. The only way you can win that rat race is to employ tools of leverage, number one, to make sure that your wealth is growing at exponential rates, way above inflation, so that you can escape. Otherwise, you will never escape the poverty trap. By the way, the people who are in the first category, the first category is those people that are stuck in a poverty trap, that are stuck in a rat race. Those people are still growing their income, but their incomes are not growing fast enough for them to escape So imagine that there is some kind of a force of gravity that prevents you from escaping that poverty trap. You need a greater force. You need to grow your income at wealth producing rates. And that's why we're going to give you ideas of how to do that. Over to you, Tefadzo.
Thank you, Themba, for that encouragement to escape the rate race. Are there any additional tips on personal budgets before we go to the topic?
I don't have any additional tips, Tafazo, but I want to emphasize something that I have emphasized before. And there are two things that I want to emphasize. And these follow from what we spoke about. And I hope people would get these 2 points because I see people making these 2 mistakes. Sometimes I talk about 10 mistakes which you must avoid in managing your finances. But let's just talk about 2 of those mistakes. Mistake number 1, don't upgrade your lifestyle every time your income grows. Right? Get that. The mistake that people make is that once they get an inkling that their income is going to grow, they also grow their expenses and they grow their lifestyle. Have you ever heard of people, maybe you're working at a job somewhere and then your boss tells you that you're going to get a 10% increase in your salary next month or with effect from next year? So once you get that news, then you begin to have thoughts of, I need to buy a better car. I need to move into a bigger house. I need to go on holiday. And sometimes people even spend the money before it comes. I see people making this mistake time and time again. Right. So that's the first thing that I would want to emphasize, Tafazo. So the tip that I would want to give you is only upgrade your lifestyle if you are working 2 salary increments after. So here is, I got this wisdom from somebody else and I applied this wisdom whilst I was working. Say, for example, my boss tells me I'm going to get a 10% increase in my salary. I would never upgrade my lifestyle. I'd keep my lifestyle at the same point where I am and use that additional income. You know what to do with it. Pay off your debt and invest more. Get that investment working for you. Money must work for you. The more money you've got in the markets, the harder that money is working for you and the more passive income you've got. So next year, maybe after some time, the boss tells me you're going to get another salary increase of 10%. I don't upgrade my lifestyle. Then the third time I experience that, only then do I upgrade my lifestyle. Following from that, let me just make a very important point. When you are budgeting, don't have a lifestyle in mind. One of the mistakes that many people make is that they have got a lifestyle in mind which is informed by expectations of society and where their friends are, and they try to make that lifestyle fit into their budget. That does not work. If you would want to know what lifestyle you should have, look at the income that you are producing. So say, for example, you earn 100 rands per month. Your lifestyle should be at least 80 rands. I think we spoke about that. We spoke about that last week, right? So your lifestyle should, your 80% of your income every month determines what lifestyle you should have. Don't make your budget, your lifestyle fit into your budget. The second thing that I would want to mention, and I see people making this mistake time and time again, avoid conspicuous consumption. Avoid conspicuous consumption. Many people want to get to a place where they live a life of luxury too quickly, right? I hope one of my employees in my business is not listening to me. I hope they are not listening to me. So I believe in paying people a reasonable salary in my business. I do. I don't want people to work for me and they get peanuts. So I pay reasonable salaries in the business that I run. So one of my colleagues in the business came to me and they showed me a car that they would want to buy. And now this is a person who does not earn much income. And when I looked at the car they want to buy, and when I looked at the brand, I'm not going to mention that brand, I was quite disturbed because I knew deep down in my mind that this car has got very high running costs and they will probably not be able to afford the running costs of the car. Or in the worst case scenario, in the best case scenario, most of their income is going to go into maintaining that car. And I really wondered, why don't they just buy a small, economically affordable car to come to work and not go into buying a car that makes a statement? And I see this thing time and time again. I'm not against luxuries, I'm not against brands, but my view is don't fund your luxuries from hard-earned cash. So if there is one rule that you must always adhere to, don't fund luxuries from active income. Fund your luxuries from passive income. If you haven't created passive income, then don't fund luxuries, at all. So those are, I can go on and go on to the, but I would want to get to the gist of the presentation. So let's move on, Tafadzo.
Thank you, Themba. I was about to ask that you always say pay yourself first. How do we reconcile upgrading a lifestyle? But then you said, I think after 3 months you can upgrade. So I think that one was answered. What are some of the principles you wish to emphasize to the audience on growing your income?
Two principles I would want to emphasize, Tafadzo. Principle number one, you've got three enemies. Those three enemies are number one, inflation, number two, costs, number three, taxes. So you are stuck in a poverty trap. You are stuck in a rat race. In that rat race, you're not the only one running the race. There are three other competitors you've got. So the first one is inflation. So what it basically means is that you must grow your income at a rate which is higher than inflation for you to be able to win the race. Say, for example, inflation is 10%. You must grow your income at a rate which is higher than 10%. That's the long and short of it. That's why it's very difficult to create real wealth in an economy which is hyperinflationary. So that's your enemy number one. The second enemy is costs. Costs, right? I was giving you an example of running costs of a car. Costs can go up. Costs are also your enemy. So as you acquire income producing assets, keep your costs very low, right? If you've got, and sometimes for some of you who are business people, I make them calculate what I call the Jaws ratio. Jaws ratio. Um, Especially if you're analyzing the income statements of your business. Jaws ratio is basically the rate at which your income is growing minus the rate at which your costs are growing. So if your costs are growing faster than your income, you are operating with negative jaws. That's the long and short of it, because costs are your enemies. That's why you must, you would want to keep your costs very, very low, because you must win the battle against costs. Winning the battle against costs simply means that you are growing your income at a rate that is higher than the rate at which your costs are growing. So let me give you an example of what I'm talking about. I think I read a report some time ago where Eskom was going to increase electricity by 15%. If your income is growing by 5% and your costs are growing by 15%, here we're just assuming that electricity constitutes, a significant portion of your budget. You are losing the battle against costs. Then we also talk about taxes, the money that the government gets out of you. Now, that's very, very important that you win the battle against taxes. Here is the thing. Mostly, if you are earning, remember I spoke about passive income, active income, and leveraged income, 3 buckets of income. Did you realize in this life, and this is a painful realization, by the way, did you realize that active income is taxed at a higher rate than passive income? Remember, we're saying passive income is the income that we must be getting. So that's one thing that I would want you to think about. If you're earning active income, that kind of income that you sweat to get, the tax rate that you pay for that income is normally very high. That's why employees are the highest taxed people on earth. Have you also realized that the more entrepreneurial activity that you do, particularly if you are earning income in a business structure, that income is taxed at a lower rate than income that you earn in your own name? So I would want you to use that knowledge to start thinking about what is it that you can do to optimize your taxes. Because if you are heavily taxed, it becomes very difficult to grow your income because there is always the taxman who comes to take that tax. By the way, I must be very clear. Tax avoidance is illegal, right? But thinking about how you can optimize your tax by implementing certain things, which is something that is called tax avoidance, that's very legal. So we're not talking about evading taxes here, right? So the first principle is that in growing your income, you've got 3 enemies. The second principle is that you must have a plan in place to grow your income. And I will give you ideas which will constitute your plans. So those are 2 principles that I would want you to think about. Maybe let me add another third principle here. Don't have this idea of growing your income exponentially, right? You're growing your income incrementally, 10% every year, 10% every year. That's good. That's good. But I would want you to have an idea of growing your income exponentially, because then you've got a greater chance of escaping the poverty trap, escaping the rat race. And in my next contribution, I would want to talk about that, Tafazo. But those are the principles that I want to put on the table.
Thank you very much. Any ideas of how we can grow our income? And what do you think about creating different streams of income?
That's a loaded question, Tafazo. But I would want you to listen carefully. Not you, Tafazo, but those that are listening to us. I would want to give you 7 ideas of growing passive income and 5 ideas of growing active income. Active income is something that we refer to as earned income as well. So let's start with 5 ideas of growing your earned income, right? But before I give you those ideas, I would want you to think about, if you have appreciated the argument that you are making, I would want you to think about what is it that I have at the moment which I can use to grow my income. It does not matter who you are, where you are in your life. There is a skill, there is a product, there is a talent, there is an endowment of talent that you have, which you can actually use to grow your income. There is a side hustle that you can create. There is an idea that you can implement to grow your income. So I don't expect you to implement all these 5 ideas to grow your earned income, 7 ideas to grow your passive income all at once. I would really appreciate it if you just implement one idea. right? Because the idea that we have here is to grow our income. So if you're working, don't go and resign from your job. Continue doing your job, but maybe you can think about other ideas in your spare time to grow your income. So let's start with 5 ideas to grow your active income or your earned income. Idea number 1, climbing the corporate ladder, right? Have you actually noticed that people who are higher up on the corporate ladder, they get paid insane amounts, especially when you get to the C-suite. So if you're a young person getting onto the employment market, you've got a job, one practical way of growing your income is to climb the corporate ladder. By climbing the corporate ladder, I mean, get promoted very fast. I remember when I started working for KPMG, they had grades within their employment structure. And, for the years that I was employed there, I think I skipped certain grades, because of the effort that I put. And it's a question of studying the environment. What is it that it takes for me to be promoted? Environments are very, very different. So that's one idea. The second idea is think of selling your time or selling your expertise. So if you've got certain expertise that you have, for example, I've got expertise in finance. And one of the things that I do is I've started coaching people on finance. So I'm selling my time. If you want one-on-one coaching, I charge an X amount per hour for coaching. So you can actually start by selling your time or selling your expertise. That's idea number 2. Idea number 3 is selling your skills. To the extent to which you've got certain skills, you can actually sell those skills as well. Idea number 4, teaching people. Many people underestimate the amount of income that they can make just by teaching other people. Aristotle, I think Aristotle was one of the wisest people that ever lived. He said that those who know do, those that understand teach. So if you understand a particular topic very well, start by teaching. And I've seen people starting to teach online. It could be a YouTube video of the things that you understand very well, and then you just put it out there. It gets a number of views. You can actually generate scalable income by teaching people. So one of the pros of growing your income that way is that it's easily scalable. Obviously, the downside is that there is lots of competition. If you go on websites such as Udemy.com, you'll see that many people are putting their courses there. But it's a very practical way of growing your income. Selling a product, you don't have to have invented a product yourself. You can sell other people's products. I'm also seeing people who are doing quite a lot of things selling other people's products. So even if you are unemployed, I normally tell people, even if you're unemployed, you don't have a particular skill that you have. One of the practical ways of generating an income and growing an income is to develop your marketing skills. I know of many people that have grown their income by learning sales. So if you're unemployed, you don't have a particular skill, you have not gone to university, and you would want to get onto this world producing journey, just learn marketing skills and just begin to sell a product. It doesn't have to be a product that you have invented yourself. Good, if you have invented or created a product good for you, you can sell that product. But knowing how to market is a very, very important skill. So those are my 5 ideas of growing earned income. Let's just talk about 7 ideas for passive income. And when I give you these 7 ideas, I'm monitoring the environment. I'm seeing how people are generating passive income. And these are areas where people are beginning to generate passive income. Remember, you will always have earned income, right? The idea is to convert a portion of that earned income into some form of a passive income stream. But I would want you to earn income in those 3 buckets. Active income, passive income, leveraged income. So now I'm giving you ideas of passive income. And these are, recent ideas. I'm actually trying some of these ideas to maximize on my passive income. Number 1, stocks and shares, right? Including trading, creating a portfolio of shares, learning how to trade markets and investing on the stock markets and having a portfolio for yourself. That's idea number 1. Idea number 2, real estate. I know of many people who have made quite a lot of passive income from real estate. Idea number 3, subscription platforms. I cannot tell you how many people I've met, especially online, who have a particular skill. And here I'm talking about coaches, I'm talking about people who create content, and they have people subscribing to their channels, and as a result, creating quite some sizable passive income. So subscription platforms are gathering quite a lot of momentum, and there are people who are generating sizable. Number 4, AI service done for you. We've been speaking about the AI revolution. And I'm actually surprised that there are people who hear about artificial intelligence and they've never actually thought about how can I benefit from AI. I also know of many people that have gone to attend AI courses and have educated themselves on some of AI products. And they are using those AI products to do work for people, automating certain tasks because there are certain AIs. For example, did you know that there are AI applications to write people's books in a way that was never done before? So if you know of certain AI applications, you can begin to do certain work for people because they're just not aware that those things can be done because of developments in AI. So AI service done for you. Many people are making money. Let's all, and the other idea that I would want to give you, let's just, say idea number 5, creator funds. So for people that create content on TikTok, content on Facebook, they get paid by those platforms, and they benefit from creator funds. I know of people that have also, made money, that way. Online shops. So instead of creating a shop which is physical, many people are creating online shops, and through their online shops, they can sell products for other people as well. Partnership equity models. Somebody had websites, creating skills. They can build a website. So what they decided to do was to build a website for this particular person. And they say to that person, if I build this website for you, I don't want you to pay me money, but what I would want you to do is I would want 10% of everything that you're going to get. I want to be a partner in this website, as part of a partnership equity model. Remember, think like an owner. I guess that's one of because ownership is the ultimate way of saving more. For those of you that read the Bible, if there is a story that I can reference, which sort of supports everything that we have been saying about generating wealth and growing your income, think of Jacob working for his uncle Laban. He went there as a worker. But when he departed, with quite a lot of wealth, and he was able to grow his income. Obviously, in those times, they were talking about goats and sheep, but the principle is the same, because he went with an idea to his uncle, and he basically said, look, the speckled sheep are mine. And you know the game that he played with his uncle Laban. And from that, he actually generated a lot of income. So that's a good example of somebody who was working for another person, but they had an ownership mentality in mind. And as a result of that ownership mentality, they continued accumulating these speckled sheep over time, and the guy grew fabulously well. And that's the application of the principles that we are talking about, here. So instead of just building a website for somebody else, why don't you say, look, I'll take 10%, 5%, I'll build an online shop for you, and you will pay me 5% of everything as part of a partnership equity model. And then you're able to create a passive stream of income. So it's a question of you being creative as part of growing your income over time. Tafazo, you also asked me the question, what do I think about streams of income? Right. So two things I would want to say. I've heard people saying create different streams of income. While least I agree with that idea, here is the thing that I would want to say. When you are starting off on this journey of wealth creation, focus is the name of the game. So focus on growing a particular stream of income until it's sustainable. Then once it's sustainable, only then should you think about growing other streams of income. You cannot just embark on wealth creation and start by, I want to create different streams of income. Many people who've got that idea never actually create the different streams of income that they have set for themselves to create. So here is my thing. Focus on a stream of income. Get that stream of income to grow over time, at least 5 years of focus. And I will explain why 5 years in presentations that I will do, later on. So focus on that stream of income for 5 years until it grows at exponential rates. You are dominating the market if you are selling a product, and then you can move on to diversifying and creating other streams of income. Until you get there, you can't just talk about, I want to create different streams of income. So that's my idea. I like the concept of different streams of income because it's part of diversification. You need to diversify your income streams. But for you to get there, before you diversify, I think you need to focus and find other ways of managing the risk while least you are focusing for that time. That would be my comment, Tafato. I see we've gone beyond 1 hour. There's a lot that I would have wanted to share around growing your income. But if you would want to get hold of me, the easiest way to get hold of me is to go onto my LinkedIn page. Just go onto LinkedIn, type in Themba Mazibuko. You will get hold of me and you can communicate with me from that platform. Tafazo, it was great talking about growing your income. Over to you.
Thank you very much, Themba, for your time and for the lessons. I hope we'll implement and we'll start growing our income. If you want to get hold of me, you can write an email to Tafazwa at tafazwamazibukospeaks.co.za. You can also visit our website, www.tafazwamazibukospeaks.co.za. Or you can also check our YouTube channel, The Dream That Is Worth Fighting For. Enjoy the rest of the weekend, and we appreciate your support. Let's grow together. Your dream